So you're thinking about making the move to the Sacramento area and you don't know what to expect right now. Well, this is a live show that we do every single week on Wednesdays, and we answer all the questions of people who are thinking about making the move to the Sacramento area right now. I'm bringing on Matt, the mortgage guy, who is a top mortgage broker in our neck of the woods. He's amazing. He does a lot of transactions, and between us, we're going to kind of give you guys a little idea of what to expect if you're thinking of either buying or selling in the Sacramento housing market currently. It's a crazy market. It's been a crazy year. Let's get into the show and let's talk shop. Matt, the mortgage guy's in the house. What's up, Matt?
What's happening, brother? Man, I've been looking forward to this, dude. Last time I came on here, we had a lot of fun. So I'm looking forward to talking about the 50-year mortgage, portable mortgages, housing affordability,
Dude, we got some good
with the
topics.
audience, dude.
Well, the other thing too for you is like for a lot of you guys, I mean, Matt is the man here in Sacramento. He, as far as on the top of the charts, everybody knows who he is. So one of the things I like about bringing Matt on is the fact that he does a lot of business. So he can give us a little bit of a temperature gauge as well on the market, because I think right now that's really needed. This year's been kind of up and down and all around. And, should I buy, should I sell, should I this or should I that? And so having someone like Matt, who's writing a lot of loans, who's talking to a lot of people. I mean, you got to have that phone surgically implanted in your head at this point, huh?
Yeah, well, I'll be honest with you, man. I got some help from some robots. I got some AI helping me. So if anybody wants to connect with me and my team, go to mtmg.com and you will get to interact with the highest level AI agents of all time. But the good news is they'll hook you up with an appointment. We'll get on the phone. You'll talk to the live person. The only ask I have is that you put notes in the call so I know how to best help you. Sometimes it's talking to me, sometimes it's Michelle, sometimes it's another team member, but yeah, just let me know what you're looking to do. So yeah, that's how you do it, Mark. You have some AI agents, and I'm not a smart tech dude, but I've got enough smart people around me. So I had somebody reach out to me recently and they're like, "Oh, hey, I was running this by Lena, and Lena said this." Lena's an AI agent. I'm like, man, she's doing good.
Man, for me, I'm a big fan of just picking up the phone when people call, because they don't expect me to pick up, which is funny because for me, I love you guys out there, man. If you call, I will answer. It's good. And I like that thing. For me, it's just one of those things that just, I don't know, just makes me, it's funny because when you do YouTube, sometimes you do videos, you do this stuff and you don't think anyone's paying attention to your videos or no one's watching your stuff and everything too. And then the phone rings and you start talking to people about it. And it's not even for like the sell or anything. It's just the idea that you have the knowledge that they're looking for and kind of like guiding them in the right direction. But getting into that and not going too much of a tangent, how are you seeing as far as like, let's break it up into sectors. What are you seeing as far as Bay Area buyers, as far as traffic coming in from other areas?
I'm still seeing some of it, I don't see a ton. But in general, like if we're talking Sacramento specific, I'm seeing, I guess, the same thing we've seen for a while. Hesitant buyers, buyers that are just like moving a little bit slower than normal. And dude, I got one in contract that I had forgot, but the agent reminded me. We've been working with this couple for 3 years, almost 4 years. And so, buyers aren't in a huge hurry, which, can be a good thing. You don't want to be a buyer that's, wavering back and forth and taking a decade. But, the truth of the matter is real estate, even Sacramento, which comparatively to the Bay Area or other parts of California isn't super expensive. It's still relatively expensive. And I would say more so for first-time home buyers, right?
Yeah.
And everything is more expensive than it was 5 years ago. Housing is no exception, right? You can't get gas for the same price. You go get one bag of groceries, you're like, how is this $85? For this small bag of groceries at Rayleigh's. And so I'm still having conversations daily, because like you too, I love to answer the phone and talk to people as much as possible, regardless of the situation. And it's fun to just kind of get a finger on the pulse for what's going on through conversations. And, I talk to people that they're making a decent wage and they want to buy a house, but their rent is $1,800, and they're looking at a decent neighborhood in Sacramento. It costs 500,000. 5% down on that $500,000 purchase. They're gonna double their housing payment real quick.
It seems like you mentioned, like I said, against the Bay Area, against LA, Sacramento's affordable. Against the rest of the United States and even parts of California, Sacramento's still pretty I don't know if we can put the word affordable with Sacramento too much if we talk in those terms. You know what I mean? Like, I talked to some people in Texas and they're like, I don't know what you're talking about affordable. I mean, it's still it's not an easy thing. And now, you've got kids, I've got kids, and the conversation's always about like who can afford, how is it going to be when they get older, as far as affording a house and everything too. And then we have this 50-year mortgage, which in theory sounds like, oh, good, bad. I mean, like, what do you think about that?
Yeah, I've got some thoughts on that, and quickly to your point too about you know thinking about younger generations being able to afford. I'm seeing a lot of that where it's like future planning, where
Mm.
parents are either buying investment property with the intention of maybe my kid will live here, or large gifts to help the kids buy because they're like, it's not going to get any easier. So my 27-year-old kid who makes $90,000, in order for the payment to make sense, I've got to put $200,000 towards this purchase. I can't remember who it was, um, but there was an agent. I either saw it on an interview or saw it somewhere where there was 7 or 8 offers on this house. They reviewed every single one, and every single one had a gift attached to it, which is wild to think about, right? Because it's probably a testament to how tough it is for first time home buyers. 3% down, 5% down isn't cutting it, and it's only not cutting it because the associated payment is something that's hard for buyers. So speaking of payment, we can talk about the 50-year because that's the silver bullet that's going to fix everything. That's what people think. And we'll get to video guy Matt about buy versus rent. There might be some reasons to buy, Matt, and you can agree or disagree with me. But real quickly on the 50-year, I had a conversation on a podcast this morning. If they were going to do this, it's still going to be one of those products that only makes sense for a small percentage of people. Down payment assistance doesn't make sense for most people. For the 3% or the 5% of people that use it, it might make sense. It might be the only way to get themselves on the property ladder. And then a decade later, they've refinanced out of it. They've seen some appreciation. They're glad they bought. They're glad they didn't, wait because down payment assistance was the only option and whatnot. So the 50-year, if it's your kind of only way to enter housing, 2.5 years later, you refinance it into a 30-year. Maybe a lower rate comes along, and that 30 years the same payment as the one you have with 48 years left on that 50-year mortgage. Just like I've done now, where I refinance someone from a 30 to a 20, their payment stays the same because they've paid it down, and I can get them a lower rate on the shorter term. So the funny part is, I don't think it's ever coming, Mark. So it's a bunch of conversation about nothing. But if they did it, they would have to tweak it. They would have to make it to where it's only for certain people, first time home buyers, maybe below 100% AMI, the median income. And then they would have to do some sort of loan level price adjustments so that the rate was the same as the 30. If you give me a 6.75 50-year or a 6% 30-year, the payment's too close. It doesn't make sense, right? It's only
Yeah.
$125 or something. And it's like, at that case, there's no incentive to pay double the interest and do a 50-year. But if you can do loan level price adjustments and say first time home buyers and anybody who's at or below the area median income qualify for this 50-year with loan level price adjustments to make it 6%, just like the 30-year, then you're saving $300 a month. And those people who probably need it the most are able to enter, the housing market, start seeing some appreciation, build wealth. So let's reply to video guy Matt. You can give your thoughts, and then I got
Hit me.
a lot of thoughts for our boy video guy
Now
Matt
you
about
first. Matt versus Matt. Let's go.
okay. Zero financial reason to buy today versus rent. If someone's buying today, it's purely an emotional decision. Well, I don't know what state you're in, Matt, but even a dumb public school kid like me can look at stats for California. That's where I live, so that's what we'll talk about. Sacramento specific, if you look back 25 years, 40 years, however many years, 5%, 5.5% home price appreciation. If you look at California as a whole, 6 to 7% appreciation. And so buying real estate and holding on to it is a wealth play that is really easy, even for a dummy like me. I looked at the average appreciation in Sacramento, Mark, and I've bought a few rental properties. I own my primary residence. If I do nothing else but continue to breathe for another 20 years, it's wild to see what that's worth, right? Um, a small portfolio, and I don't want to spill the beans, but I'll tell you, it's well into the 8 figures in real estate, and by then, most of the rentals are paid off. Not even by me, right? But if you're just talking about primary residence, I would tell video guy Matt that on a short time horizon, 3 to 4 years, like max, maybe you don't buy. If you're going to be in this house for 7 to 10 years plus, even if you look at like rent versus mortgage payment, your mortgage payment is more. Over time, more and more is going into that piggy bank of paying down the principal. Over time, homes appreciate. You can fight me on that one. Like numbers don't lie, and I'm pretty good at numbers, if nothing else. So I still believe in real estate, and anybody who's like, oh well, if your rent is 2,400 and the mortgage payment's 28, you take the 400, you invest it, and over 30 years, it's this. There's two problems with that argument. The first problem is that no one's gonna do that. Be responsible enough to put that $400 in savings account, never touch it, never have something go wrong, never have, a hospital bill or something where they pull $5,000 out of there. So that's never going to happen. Secondly, I'll give everyone just a huge epiphany. Rent 10 years from now in the place you're renting today will not be the same, video guy. I promise you. Promise you your rent is not going to stay the same for a decade. All right. End rant. You go now, buddy.
In this market right now that we're in, I could see how it's a tough one. It's a tough pill to swallow. Majority of the people we're working with are people who are coming in from like maybe markets that are more expensive markets, people who are kind of relocating for jobs and everything too. I find right now that a lot of the people who are looking in Sacramento buyers are super. And here's the thing, if you're a realtor and you planned on getting your license and cashing some checks and doing all that stuff, I just had a conversation with Michelle on my team, and I was like, this is like the market. This isn't the market to enter if you're thinking that. This is a tough market, especially for realtors out there too. And, I get it because it is a market where people don't want to buy something unless they're exactly sure that that's what they want. They want a deal. They want something turnkey, and they're very, very hesitant on pulling the trigger. And that's kind of why I always tell people, I'm like, the biggest piece of the puzzle is education. A lot of people will see stuff and say, I want it. You got to know what you want in this market. And so for me, I think that, if someone's moving here, I see people buying. If someone's maybe looking for an extra bedroom, they're in no rush. And this is an interesting market because they're really, unless you're moving, unless you definitely need a bigger place, like definitely 100%, we got a baby coming, like there's no big pressure. I don't see a huge like, oh, I gotta buy right now, or it's gonna come back and get me. I just don't see it. I think people can actually pack it in a little bit, go to Home Goods, go on vacation, come back in a few months, and the same market that they see now is probably what the same market will be in a couple months. I mean, don't you think?
Yeah, I mean, maybe, but the market as it currently sits is pretty soft in a lot of areas.
Yeah.
And what buyers take for granted is it'll always be like this. I was looking recently because I'm actually in the market. I'm selling a current investment property, and I'm a 1031 exchange. So I'm going to buy another piece of real estate. And between the close of the one I'm selling, uh, or after that close, I've got 45 days to identify. So I've already told a bunch of friends and people like, I'm looking for something specific, single family plus ADU or duplex. And as I was looking, you know what I found, Mark? I was like, man, I was poking around 2 months ago. Some of these places that, in my opinion, aren't priced that high, are in good condition, like nice places that you would think could sell haven't sold yet. And so I know that, for me screams opportunity. When I'm
Okay.
looking at real estate and there's softness in the markets, stuff isn't selling super fast, like I get excited about it. The problem is, the doomers and gloomers are like, oh, it's worse than it was 2 months ago. 2 months from now, it'll be even worse. Like, that's not how it works. With all of the stuff and all of the talk around housing, rates come down, programs get announced, anything that pushes demand. They already talk about like 10% more transactions happening next year, um, has upward pressure on prices. And even if the prices don't get pushed, like the stuff that's currently sitting that you might get 10,000 in credit and $10,000 off the list price, that might not be here in a few months. So I don't know. I'm all for like, take the opportunity when the opportunity presents itself. Don't assume that, you know, a, a, a certain trend will continue.
Let me ask you something. Okay, so this is interesting. Would you let's just say, for example, like your kids were like, I want to move to Folsom or Grant Bay or whatever. Would you entertain it right now?
Yes.
Okay. Okay. Fair enough.
Yeah. I mean, I think that it's a worthwhile conversation. And that's the cool part about your job and my job is I tell people there's no one size fits all.
Right.
Everyone should buy, everyone should rent, everyone should do conventional, or everyone should do FHA. It's like very unique. And you move there and you're like, the wife got a job and she wants to live close to there. The Folsom School District's great. And they look and okay, I can rent a house that we like in that school district for $3,500. Or the stuff we like is 650 to 750. And you start doing some analysis, that's great. And then you come to the, you know, end the kind of decision of, you know what, for us right now, let's sign a 12-month lease and let's rent. Or we're going to be
Yeah.
here for 10 plus years. We love this school district. Our kids are in first grade and third grade. They're going to go through high school here. So we're going to own this for at least a decade. Let's do it. Even if with this down payment, our mortgage payment is $4,200. By the time they're in high school, this house is going to be renting for $4,500.
Okay.
And if it and for some people too, like I think it's not all math when it comes to primary residence, especially. I know so many people, Mark, that lived in 3 different houses in a 5-year period and would just give anything to not like have to uproot their kids and move and pack and do all that stuff because a landlord decides to sell. Or, they make up an excuse of like, I got a family member moving in, so giving you a 60-day notice. You gots to go.
Well, I mean, you hit the nail on the head a little bit too. It's like, know your budget, time your life, time in the market always tends to fail for people anyways, and just kind of figure things out. And this is why one of the things that I really like to focus on, this is one of the things that probably people on this channel are tired of hearing me say, but I would say get educated, figure out what you want, figure out, your monthly and all this stuff too. But like, even if you're not buying today or tomorrow or even a month or two, no areas, no, no communities, no floor plans, no price per square foot, no, all that stuff. Because right now is your time of your diligence period, right? Figuring exactly this out, especially for people who are reloading into the area. Take your time, figure it out, you know what I mean? And figure out what you really, really want. You know what I mean? And what you need versus what you want. I mean, that's the time. This is the time for it right now. And do it during Thanksgiving. Come and visit Sacramento. Have fun. Get some turkey in your stomach and cruise out and see some houses. Or don't see any houses. See areas. Just take a tour. Don't call those pesky realtors. Go out and just take a little bit of a tour and see which areas you like. Because I guarantee you, and Matt will attest to this as well, Sacramento, you might think one size fits all in Sacramento, and I can tell you this, It is so not true. You have so many different areas, so many different things, so many different lifestyles here in Sacramento that you just got to come out here to figure it out. You know what I mean, Matt?
Oh, 100%. And one quick thing, because you mentioned timing the market, like there couldn't be a worse idea. I've heard, I've just seen it and lived it. Right, I've been in mortgage for long enough, and I can look back. I've got Dropbox with tens of thousands of files. I've got Excel spreadsheets, Mark, of showing people loan scenarios from 2017. I'll wait. No thanks. I remember specifically too in 2020 being called a complete idiot. Like, you're going to pay 460 for something that is on the market for 430. Um, Actually, yeah, and I don't think it even appraised for four. I paid above list price. I paid above what it appraised for. What a complete idiot! Well, there would be a line of people outside that house if I told them, like, who wants this house at this price with this interest rate and a $2,200 a month payment. I mean, they'd line up for blocks and blocks, right? But I was a complete idiot at the time, right? Um,
Well, well, I remember doing this podcast and talking about 2.75, and there were a bunch of people that were waiting around for prices to drop.
yeah.
Nope. We're waiting. There's going to be a crash. That 2.75 is just going to kill. And I'm like, I don't think that's going to happen. But, and then, people miss their envelopes, and now people are printing t-shirts. I got a 2.75, it is just the kind of the way it is, time your life, don't time the market, and kind of figure out what works. Don't have that mortgage payment that freaks you out of the course. Don't, go to Costco when you're hungry type vibe, but, do your thing. All right, let's go. Sam Lebanese. Good evening, gents. Good evening, Sam. Tatiana, my favorite influencer. How are you doing this evening? Hopefully you're having a good one. Hopefully the wet weather is treating you nice, because I love this time of the year. I love the rain. I love the little bit of coldness in the air. You know what I mean? I like the switch. And if you guys don't know about Sacramento, this is the time of the year where everything kind of switches. It's a little rainy outside. It's cold. You're getting you're bundling up. You're, getting those jackets and everything too. It's a little chilly, I got to say. But just so you guys know out there, Sacramento doesn't just lay at 120 degrees sun during the entire year. It's a seasonal kind of place, right, Matt?
Oh my gosh, dude! I had somebody who had relocated from Southern California up to Northern California, and I talked to him a week ago or something, and he's like, "Man, it's pretty nice." And I said, "Dude, when the leaves change color and fall, where it's like 60 degrees, it just feels crisp." You know what I've been doing a lot lately? Just a tangent. I've been walking. I just like made just a decision. Like, I got to walk more. I'm sitting in front of a computer. I'm crunching numbers all day. I got to get out there and walk. So 2 to 3 times a day, some of my phone calls are while I'm walking. I'll walk a mile and a quarter in a 25-30 minute period. And it's so friggin' nice, man. So
Yeah.
nice. The weather is amazing. And that's one thing about Sacramento is people come from other places. Like, you guys actually have seasons. It's hot, but it's dry hot in the summer. And as long as you got a pool or know someone at the pool, you're in good shape. The falls, really, really nice, in my opinion. Like,
Yeah.
probably my favorite season. And even in the winter, it doesn't get that cold. It gets down to the low 30s on the coldest days, but warms up to 45 or 50 during the day. So, yeah, I'm a fan of Sacramento weather.
Oh yeah, I love it. I mean, it's so funny because I turn on the fireplace in the morning at 6 o'clock in the morning, got it all like the seasonality for me of Sacramento is just really, I think it's really underrated, guys. All right, let's go into this. Video guy Matt says 50-year mortgage is a scam idea by the biggest grifter in the game. Or yeah, I mean, here 50-year, like I said, if it never happens, it might be the best thing ever. And Sam says, okay, buying always makes sense versus renting. With buying, the place is yours and you can do whatever improvements you want to enjoy it being yours, not someone else's. That's outside of the financials of it. It's so funny. It's so like with Zillow, with all this stuff too. The funniest thing is, like, we're treating houses almost like more like Bitcoin. You know what I mean? And I remember my dad, we picked a nice community, nice area. He had his budget and he was like thinking to himself, not about appreciation, not about all that stuff. He was like, this is a nice street. I like this. I like that. Kids can grow up here. It's good. And that was it. It'd be nice to kind of somewhat remember that still exists in the world, and that's kind of part of it. I mean,
Yeah, and it's funny too because I've talked to my dad more about some of the backstory, and people go crazy about how high interest rates were in 1980 and 1981. Probably the same timing in the market. BS, like shout out to my boy video guy Matt, um, who's who's probably anti housing, but he bought with my mom, and I don't remember the exact story, but something like 60,000 in 1978. And that house appreciated a little bit and he sold it for 80 and then bought another, like he bought three houses in a period of like 5 years. And in 1981, on a truck driver's salary, he basically bought in the nicest neighborhood he could afford. And I don't know how true this is, but my mom and dad like to tell the story of, um, they took home 1,200 or 1,250 bucks a month, and the mortgage payment was like 950. Because even at the $90,000 purchase price or whatever it was in 1981, they had a 12% first and an 18% second, something wild like that. Um, and so he still owns that house that he bought in 1981 for 90 grand. It's been paid off for a number of years. And yeah, it's not the fanciest neighborhood in Sacramento, but that thing's worth 600 grand. Um, and he still got a nice. That's another thing about California. Not California all you want. Prop 13 is property taxes are nice and low, and so
Oh
he's just
yeah,
got
oh
a
yeah,
prop.
yeah.
Yeah, like imagine if he was renting, right? Like he's got a property tax bill and homeowners insurance that probably total 200 bucks a month. So he's living in a $600,000 house for 200 bucks a month. We'll do that for the next couple decades, however long he's on Earth. And you certainly don't get that from renting.
No, no, you definitely don't. I mean, and you get to paint your own walls. So there's added bonuses. So let me ask you something. If there's someone out there, let's say from the Bay Area, and they're watching this video and they're saying to themselves, man, we want to move to Sacramento. Everyone's kind of telling us, like, what advice would you give to them as far as, and at their time in their life, and they're saying, within the next 6 months to a year, we want to get out to Sacramento. We might be going up there to just take a look at stuff. What would that advice be to them?
Yeah, I think like you said, for anybody who's moving to a new area, you want to get to know it a little bit
Yeah.
before you buy, because like we talked about, buying um, really makes sense when you plan to own 7, 10 plus years. And I've seen too many people make the mistake of buying on impulse or buying without enough information. It's like, oh, I didn't realize, right? And then
Yeah.
you sell it a year later and it's worth the same, but you're paying fees to sell, and so you're losing money. So that's the best advice is do some research on that, and then like I tell everybody, getting pre-approved is free, running numbers is free. Have a really good idea of your budget. There is no limit. Like I never stop people and go, you know what? We've ran 6 scenarios. We're not running anymore. I'll run them till you're blue in the face and I'm blue in the face. What does it look like at 600,000, at 650, at 700? 5% down versus 10% down. Oh, what if we did this? And what if we got a $10,000 seller credit and bought the rate down? What if we tried to do a 1.0 buy down and did that? Like you can get really crystal clear on your budget, which is
Yep.
important. And not enough people do that because to the earlier comment, buying a primary residence to live in, to raise your family in, to remodel how you want to remodel and do all that stuff is part of it. And that's, a great part of the American dream, but live the American dream responsibly and do a little bit of um, planning around the mortgage, which there's a lot of good information out there, especially if you go to
Yeah.
mtmg.com.
Another thing too, I would say to people in general right now, what I'm seeing is a lot of sellers are pulling their houses off the market, probably going to relist this spring. Also, here's the thing though, if they pulled off their houses, that doesn't mean necessarily your realtor can't call the realtor that listed it and say, hey, you know what? You just pulled this house. My client's interested. Can we maybe see something, make something happen? I mean, I think realtors kind of need to think outside the box a little bit. I would say also what I've been running into is a lot of buyers aren't seeing what they want on the market right now, and it's a little frustrating for them. Maybe they're okay with, they're not okay with the rates, but they're in the resale market. I think in the new homes, you're seeing a lot of deals, and people are trying to calculate if it's a deal, if it's not a deal, if it makes sense, if it doesn't make sense. Now, here's the thing about new homes, like it's a deal for someone who's looking for that specific deal, if that makes sense. Like it's not a deal for just everybody, or or it might not even be a deal. You have to analyze the numbers and figure out what you really want and see if it makes sense to you. Like Matt was saying, like it's not one size fit all. And if you see something, even Toll Brothers, Taylor, whatever, a new home, and you're, wow, that's a great interest rate, that's an amazing house. I mean, it's like anything else online or anything you see. You just got to figure out if that's really a deal for you. Does that make sense for you? Is that something and I think, that's one thing that you just have to analyze and figure out for yourself and do your little bit of diligence, see what the payment looks like, if it's too good to be true, if it's something that for you, you make that decision yourself, if you want it or not. And I think deals, that word deal, probably, and I think we're all guilty for about it for a little bit. It's something that we throw out there left and right. It's a deal for the person who it's a deal for, if that makes kind of a weird kind of sense. It's not just, if Matt goes, oh my God, there's a house in Rancho, it's a 4-bedroom, 2-bath for $400,000. It's a smoking deal. Oh my God, it's great. I'm going to sit there and go, oh, that is great for someone who wants that house. Not for me, but for that person who's looking for that house, So I don't know. What do you think, Matt?
Yeah, no, you're right. That's why the conversations have to be had, is because
Yeah.
everybody's got different goals and aspirations and needs and wants. And something you said, which is very, very true. And you want to talk about like what I see um, in the market, being on the phone in my, loan origination software every single day, is buyers, like you said, who are willing and able and pre-approved, but they go out there and it's a big step. Buying a house is a big deal when it's, a large mortgage payment attached to it. They're not going to buy any old house. So they've got a zip code or a school district or an area they're looking to buy. There's 7 houses and they don't want any of them. So, as we go into 2026, I think there's a lot of predictions of like 10% more transactions going on. As people start to list, as some inventory hits the market, there is certainly demand for those houses. There's just not
Yeah.
blanket demand like there was in 21, where like no matter what hit the market, it's got a low interest rate attached to it, I'm going to buy it. It's selective demand. I just made that word up. That's a perfect way to describe it.
Coining
Pat
it.
myself back there. I want to hear from Video Guy Matt. I wonder what market he's in, because thousands, yes, seriously, thousands of owners in our area who are in delayed foreclosures, according to Video Guy Matt. I know some people are entering foreclosure. It would be interesting to see the data, right? In 2010, there was 3 million foreclosures. I want to see if there's 1/10 of that, which I bet there's not. I bet 300,000 would be a number we wouldn't hit in 2025. But to your point, Video Guy Matt, like people bought in 20 to 24, they might have stretched a little bit. They might have been like marry the house, date the rate, with the idea they'd refi. I don't know where you've been, brother, but I refied those people. I mean, I refied a lot of people from 7.25, 6.99. I've got them into a 5.99, 6.125. If you bought during those periods and you've got an interest rate that's above 6.5, call me. I'll get you out of it. And I was talking to somebody. So many mortgage companies had a record month in October. So many. I did more loan volume in October than I've done in 5 years. A lot of loans. A lot of those were refinances. And I told somebody those refinances, to Matt's point, were people who bought from 22 to 24 that were a little bit stretched at the price they bought, at the payment they bought at. And whether they did a buy down or didn't do a buy down, or just were, in a rate where their payment was $4,600, they really needed that relief. So it was a great month to say, you've stretched to pay $4,600 a month. let's get you locked in at 599 and 4150, right? Saving you $450 a month. But there's still people. I literally made a video yesterday, Mark,
Hmm.
where I held up a lighter and I held up a $20 bill. And I don't often get frustrated because I'm just out here giving advice. People make their own decisions. I've got somebody who's got a 7.99%. And based on their loan balance and based on what's available to them, which is like a 6.125, they're going to save $600 a month. There's 30 days in a month. If you divide 600 by 30, that's $20 a day. They are burning on fire $20 a day every day they don't refinance this loan. And it drives me crazy. It's not my $20, but I just hate to see people do it. So yeah,
Okay,
I mean,
this is a good thing for you. Okay, so like we've seen during the course of this year where there's been like dips, right? We've seen like dips and everything too. So one of the things for you, I'm sure you have people on kind of like, like alert status where they're like, if rates drop and you're seeing them go down, I need to, do you offer something like that?
yeah, so there's a lot of rate alert and things like that. I honestly um hate to be like a spammy hardcore salesman marketer. And
Yeah.
so for better or for worse, I'm probably letting some stuff slip through the cracks. I'm letting idiots like Rocket Mortgage, pound the phones and potentially refinance a client of mine that I've done work with in the past. Um, Not give them a good as deal as I could give them, but I'm sending out stuff. I looked at 22 to 24, and I sent a few, you know, alerts to people that were above 6.75 and said, let's take a look. And the good news is, a record October meant that a lot of people reached back out and said, yeah, let's take a look. And I would imagine it's interesting, Mark. Like in the last 11 years of doing mortgage, if rates come down, it's not like the way down, or even if they flatten out and they're low when people actually take action. It's when they start to go back up. And so
Yeah.
like rates will tick up an eighth or a quarter. Then people are calling me like, hey, I gotta I gotta refinance. Like, I don't know what it is about human psychology, but it's like I've been pinging you every 2 weeks for 3 months, letting you know that like of all the past clients I'm looking at, your $600,000 balance and a 6.99% rate is like ripe, very ripe. Like this thing's going to break even in less than a year as far as cost versus benefit. So, um, anyhow, yeah, there's some
Well,
people out there I'm sure that are yet to see the light.
well, I think also here's the thing. A lot of people are like going lower, lower, lower. Uh-oh, it's going back up. Call Matt. You know what I mean? Like, so it's like, it's human like nature. They're, we're finally going down there. Maybe we'll see that 2.75 again. But it does make a little sense to me. I mean, if I was looking to refinance, I'd want it to go as low as humanly possible, and then, but it's a hard thing. I mean, a lot of people look at the 10-year treasury to kind of gauge a little bit. A lot of people are like, for me, I've seen a lot of people win not after Jerome Powell's announcement, but just before he makes the announcement. So it's interesting. There's definitely psyche to that. All right, we got
Oh,
Jesse.
for sure.
You want to read it?
Yeah. So Jesse, and I got a question for Jesse. Hopefully some people hang around and they can answer some of the questions on these comments, because sold my house back in 2020. My rent is 1/3 of what my mortgage was. Buying does not make more sense to me, which is cool, right? Like it's not going to make sense for everybody, but I want to know some details, because this is wild work to think that in 2020, whatever you owed on your house, whatever market you're in, you could have refinanced a sub 3% mortgage rate. And like, even if you owed 400 grand, your all in payment should be like $2,000. You're trying to tell me you're renting for 700? Give me the exact numbers. Cause I want to test your theory of your rent is 1/3.
All
Um,
right. You said I've been able to invest, which I wasn't before. Hopefully, you invested in AI stuff, man. We've been working with NVIDIA people like left and right coming into Sacramento.
yeah,
So we'll
I
get
was
to
going
some
to say,
more.
if this guy bought Nvidia stock, Jesse's doing quite well.
All right, we got Sam. And Sam, thank you for tuning in, my friend. Okay, I do agree that there's a case by case thing. if you aren't able to get your payment down to where you can afford it today and in the future, i.e., don't speculate on the future, rate and refis, then don't buy. Yeah, you know, I talked to a lot of people, and everyone's always about like, I want to buy something 600,000 or below or whatnot. I would also say one of the things that I would do myself would be figure out what that mortgage payment looks like. It's not necessarily about the house price because you can get seller credits and everything, but think about what that monthly looks like with everything included. When you say like that's probably something people also should get educated on exactly what that looks like in what scenario. You know what I mean?
100%. And that's where like I will just scream it day after day after day, and people still will be like, you know, am I pre-approved or not? That's all they want to know. And then they're like,
Yeah.
we're submitting offers this tonight. And I'm like, hey, I'm going to record a video and go through this Excel spreadsheet. And then you can use the Excel spreadsheet to, see what it's going to look like at 510 and 515 versus 500. And people are like, whatever, dude. Like, I qualify, I'm buying. I'm like, that's not what you want to do.
All right, we got video. Yeah, Matt. Life happens. Can't guarantee long term hold. We just pulled forward massive appreciation, which has obviously ended. Anyone who bought in 2022, 2024 in our area has lost equity. Need to sell. Can't. Interesting.
Video guy Matt, are you in Austin, Texas? Are you in Punta Cana, Florida? I'm going to guess Texas or Florida. It sounds like some Texas or Florida action where, like, I get it. You bought in 2022, and a lot of places, Mark, for somebody who looks at numbers, and I'm a numbers guy, it was like May of 22 where they might have peaked in price. Um, Only thing that can save the market is if Grifter Pulte subsidizes demand more than this admin already has. That is sole risk in waiting to buy, in my opinion, uncertainty or government intervention. And this is where I totally agree. The worst thing ever would be some government intervention that just like juices up demand. Cause that,
Yeah.
like, people like it and it sounds good coming from a politician. Let's give everyone $50,000 on their first house. Not a good idea. Cause then what happens? Everyone goes to buy houses and they're all $100,000 more expensive. So net, you lost 50 grand, but it was a good talking point and everyone felt warm and fuzzy, but yeah, we don't want that. I agree with you there.
All right. Let's just take the next one. Bought a house in January and I got 2,400 square foot in Fair Oaks for 530. My neighbor can't sell their house for 5 months, 560. I'm scared my property is cooked. I'm renting it out. What do you think?
um, if you're staying in your house and you bought with a mortgage payment that you can afford, like, it's almost like buying a stock. You're not losing unless you sell. And, f- housing shouldn't be looked at in a short-term window where it's like I buy it and I'm watching the Zestimate every month to see if it went from 530 to 532.6 to 534. Like, pay your mortgage, live in a house that you own that nobody can kick you out of. Look up in 10 years and it's worth 725. Look up in another 10 years and it's worth $1,050,000. Look up in another 10 years and it's worth 1.4 and you've got it paid off, right? Like, I don't know. People, in my opinion, are just like too hyper obsessed on short term. Real estate is not a short term investment. I know so many deca millionaires and I know thousand, millionaires that all or some of their wealth is in real estate. None of them were thinking about getting rich quick, right?
Yeah.
And so, um, owning real estate for the long term, you win. Period. I will fight that with anybody. But if you look at it month to month, you're not doing your like you don't do that when you're putting money into a 401k and you're working for a company for 20 years. Like, every day you're looking to see if it went up or down and your $200 contribution was a smart idea or not. Like, no, you plug money in, you put your head down, you work, You look up in 30 years and you got 1.4 in there.
There you
All
go.
right.
What do you think, man? This is the first show I've been busting out the glasses. It's just, oh my God, these lights are crazy.
I like it.
All
Oh,
right.
does it help with the light?
Oh yeah, big time. I got these because the light is just always on my eyes and everything too. So sorry if you guys the glasses, but it's gonna help
My
me read these
long-term
things a little
vision's
bit
bad,
better.
so I got my first prescription glasses.
Oh, all right. Yeah, mine's more reading glasses, but yeah, no, man, it just shows that we've been doing too much YouTube, man. Too many lights.
I I can see the comments much more clear now. The MBA
Oh
Guru
yeah.
show, are you cash flow negative or put down enough to at least break even with the rent you were getting?
And you know what's a funny thing though? I've been working with a couple of investors right now, flippers, right? People who are looking for flips. And before they're even ready to put an offer in, the property's gone. Last night I showed one in where was it? Carmichael. And this morning Michelle hit me up and she's like, it's gone. I mean, we
Wow.
like investment properties are just flying, like, and it's interesting because I mean, for someone who's looking for a primary, it seems to be really slow. People are super picky. They're picky, but they're also not seeing the inventory. So it's a double whammy. But for the investor, I see a lot of investors like eating really, really well, flippers and all that stuff too. For me, I don't see how the numbers pan out, but at the same time, if you can get something really low and you bank on appreciation, I mean, you know, I think my own gut tells me that if for some reason next year we get into the fives, we're back in business. So I don't know. What do you think?
Yeah, I mean, I got a lot of clients that are buying it down to 5.99 and 5.875. Yeah, it'll be interesting to see. We're gonna need a couple things to change. To your point, like that's one of the big problems with real estate, and that if you want to talk about fixing housing,
Yeah.
if Bill Pulte or anybody is listening, you need people that are actively involved in real estate to help you guys with solutions. So I'm agreeing to fly out, sit down, and talk. Like what we really need to do is free up inventory. You've got to take, um, 60-year-old plus who own like, I think they own over 60% of real estate in this country. They are disincentivized to downsize, to move, to do anything, um, because their house is paid off, or they've got, especially in California, they've got this lower tax property tax basis. And so do something to incentivize those people to sell, because those are homes where I just saw the stat, like something like 30% of seniors live by themselves. Imagine like some 74-year-old woman who's living by herself in a 2,400 square foot house. Like she doesn't
Yeah.
need all that, right? But if you told her, if you sold this house, you'd pay capital gains because you got a bigger gain than your exemption, and you're going to get a higher property tax bill, and so it's going to cost you net more to live in a condo in a retirement community, like she's just going to stay put. But if you
Yeah.
incentivize those people, then a lot of that inventory hits the market. It probably helps you know move families in and kind of start increasing the slow amount of transactions that we're seeing.
It's interesting too. I mean, here, let me see if I can adjust my volume a little bit. I just saw that comment. Tell me if the volume, guys, is a little bit better. For me, the way I look at stuff too is that I saw this happen in Marin when I was growing up. It was one of those things where like prices just skyrocketed, right? And the only way anyone could even buy a house was just hoping that one day they would inherit a house. And it seems like Sacramento is going that way a little bit. What do you think?
Say that again. I missed it.
Well, when I was in Marin, I was growing up in Marin, everyone, prices were still relatively high, but everyone was like, okay, get a job, marry, whatever. A couple people get a house and everything too. But what I noticed is a lot of my friends who live in Marin still, they didn't buy their own homes. They inherited homes because the market became so expensive that that's kind of the way they were able to get in. And I'm seeing Sacramento kind of turn into that as well too. What do
Yeah,
you
I think
think?
you're right. I think that there's um, a lot of people I'm talking to where they're like, you know what, I should talk to somebody, and they talk to a friend, and their friend's like, call Matt to give you honest advice, and then we talk, and I'm like, ain't in the cards for you, right? And especially if you're on one income, maybe you work, a government job that's stable, and it's great that you got a stable job, but you're earning 77,000 in an expensive state to live in. It's tough to buy, and so yeah, to your point, that might be inherit mom and dad's house when I'm 55, and that's when I get it. Like that first time home buyer age, dude, just keeps getting higher and higher. I think last I heard it was like 39.
Yeah. It's
It's
nuts,
wild.
man. Unfortunately, many are cash negative. Also, factor maintenance into your monthly loss. We just did an HVAC on a family rental, 14K. Same system for 8K a few years ago. Maintenance is higher than 1% the value now. What do you think?
Yeah, I mean everything's more expensive. I was just talking to somebody that replaced a roof and it costs $30,000. And so it's you're always going to be able to find positives and negatives, pros and cons with anything, right? People like stocks are risky. I knew somebody who lost money on them, right? So you didn't buy Nvidia, like obviously people are
Yeah.
winning buying tech stocks. And the same thing happens in housing. It's like, oh, this person bought in Austin, Texas, where they built 9 bazillion homes, and they bought a new build where the incentives sounded great because they got 30K from the builder, but they also paid 500,000 for the house, and now there's 90,000 units within 1 mile, and there's so much inventory and competition that they'd be lucky to sell this thing for 450. Well, that's a bad stock. And then you've got
Yeah.
somebody else who bought, they got a great deal. They're in a neighborhood they love, in a school district they love, and the thing's going to appreciate by 50% over the next decade. And they know they're going to be there for a decade. They won, right? And so every person has to analyze it for themselves. Anybody who blanket the real estate market sucks, or the real estate's the greatest thing in the world, that's neither one is true.
Yeah.
There's just, very specific um, scenarios for every single individual, every single family. And then real estate's also local, right? So Sacramento is going to
Yeah.
behave different than um, different cities in Florida. It's going to behave different than, Southern California. The, the, I was gonna talk smack. I better not. I'll get some hate for some Southern California people. I always love like NorCal versus SoCal, battles, because I've been in NorCal for 45 years, so I gotta be uh, rooting for NorCal. But
Oh yeah,
but
yeah, yeah,
anyhow,
yeah. No,
yeah.
NorCal, man. Oh, hey, you guys. By the way, if you guys think right now things are getting spendy right now in the economy, let me know because man, I went to Costco. Everything's expensive. Everything is getting pricey. Everything is getting so crazy. I mean, people are still buying, which is nuts. But if you guys think it's getting a little spendy here in the US, give me a thumbs up on this video. Let me know in the comments as well too, because I'm feeling it. I don't know if you guys are as well too.
All seriousness, if me and my team can help in any way, go to mtmg.com. I think that, I'm a humongous fan of real estate, and being involved in real estate financing in mortgage for over 11 years. Um, it's not that I was born a rocket scientist, or that, I went to enough schooling to be a, you know, master's degree educated guy, but I've done a lot of mortgages. I've talked to a lot of people and structured a lot of mortgages. So that is something I know very well. And I love teaching people. I love empowering people through education. So if you've got a scenario, if you want to talk, whether you're buying next week, next year, or never, I still like the conversation. I think, like you, Mark, when somebody calls you and you can talk about something you're passionate about, it fills you up, and people are like, thank you so much, that was awesome, thanks for answering the phone, and you're like, I enjoyed that too, that was fun. So
Oh,
feel free to reach
100%.
out. Yep.
All right, Matt. Thanks for coming on, my friend.
Thanks, buddy.
All right, guys. Hopefully you enjoyed the live session tonight. Your home purchase is all about you. Do your diligence, figure out the schools, figure out the areas, figure out communities. There's so many amazing ones here in the Sacramento area, but everyone's looking for something different. So I would suggest you guys getting out there, working with a good team, educating yourself and figuring this stuff out. It's a stressful part of it's just stressful, right? But it should also be a little bit of fun. Sacramento's an amazing spot. I moved here a while ago. I don't regret it. I think it's great. I'm going to be going up to Tahoe doing a little snowboarding, but I just want you guys to know straight up, this isn't about a sell. This isn't about a you should buy or anything too. It's more about just educating you on what the market is like right now too. This home purchase is about you. This home sell is about you, not about me, not about Matt, not about anybody. So do the diligence, figure the stuff out as well too. We're here if you want to hear our opinions, if you want to talk to us a little bit about the market. Our team, my team, the Sacramento Real Estate Group would love to talk to you. We're Guide Real Estate, by the way, brokered by Guide. And also another on a side note, if you're someone who celebrates Thanksgiving like I do, have a great Thanksgiving. Enjoy that family time. Enjoy 2025 and just be grateful for those around you. And I will be dropping a video on Friday at 7 p.m. Now, this Wednesday, next Wednesday, I will not be going live, but I will be dropping a video as far as on Wednesday at 7 p.m. And then I'll see you guys at the next live in the following week. So thank you guys for tuning in. Smash that like button. Okay, guys, next week is Thanksgiving. So I will be dropping a video on Wednesday at 7 p.m. instead of going live. It's going to be either a house tour, it's going to be either a market update, it's going to be something fun for you guys to watch. So stay tuned Wednesday at 7 p.m. just before Thanksgiving for the video. Now, guys, one thing before I go, before I get started on my like, comment, and subscribe stuff, thank you guys so much for tuning into the show. Thank you for participating. Thank you for watching this show. It means a whole lot to me, and it gives me a whole lot of energy to go about an hour and a half to 2 hours live every single week, but I absolutely love doing it. Now I'll get into my normal spiel. Please subscribe, please like the video, please comment. It would mean a whole lot to me and the YouTube algorithm. Now, if you're thinking about making the move to the Sacramento area, my team, the Sacramento Real Estate Group, with Guide Real Estate, would absolutely love to talk to you, tell you a little bit about the area, and then hook you up with an amazing tour. Get educated. Education is key, and getting that first step is so essential to knowing what you want in the Sacramento area. Now, if you're someone out there who's looking to sell your home in either Sacramento area, Bay Area, or Tahoe, reach out to our team. We're having amazing success with YouTube and social media, and we'd love to show you some statistics, why we might be able to sell your house on social media, maybe a fantastic YouTube video. Guys, honestly, marketing is the key to selling homes these days, and we can definitely work with you on that. Now, one last thing before I go, there's a playlist right over there of other videos I've done about the Sacramento area. Check them out. Tell me what you think. And again, guys, I will see you this Friday, I'll be dropping a video. Next Wednesday, I'll be dropping another video. Friday, another video. And Wednesday, I'll be back doing my live. Have an amazing Thanksgiving. And again, guys, thank you so much for tuning into the show every week. I'll see you on the next video. Have a good one.